Markets down 64, and we are basically at the day's lows again. And yeah, I mean, what, 5 or 6 points off the lows. Same is the case with the Bank Nifty, mid-cap and small. Mid-caps actually have bounced a little bit. Small-cap index also is down 0.5%, but that is at the day's low. So, I mean, it's sideways. And I was mentioning how the Nifty was still up for the week, Friday to Friday. It's very, very close to turning red for the week. Maybe 20, 30 points more, and we slip into the red week on week. 10,759 is where the Nifty is at. Okay, lots of stocks in focus, and Sonal, my colleague, is in the studios to wrap out the important one. Sonal, over to you.
Thanks a lot for that. And I'll start with Tata Motors. That is in focus because the flash just came in. The December JLR group global wholesales are at 45,474 units. And the total group global wholesales, that is down 14%. And that is a disappointing number. And that's why we are seeing that sharp knock on the stock is down around 3.5% right now. The other stocks that will be in focus involves Bharti Airtel. That is also in focus because Merrill Lynch has come in with a report where they have downgraded Bharti to a neutral. They also see further risks to consensus downgrades, and they expect a slower than expected growth for the company for two reasons. First, they don't think the company will be able to take any headline tariff hikes going ahead. Second, the impact of interconnectivity usage charges that will start trickling in to the numbers of the company starting 2020. So that is something that will be negative for the company. ITC also is in focus because CLSA has increase the target price to 400 rupees per share versus 390 earlier. It is a valuation call actually right now. They say that at 26 times FY20 PE, the risk reward for this particular stock is highly attractive. And they also think that stock offers a downside protection right now, which is very rare in consumer space. Also, basis their discounted cash flows, they are seeing a 7.5% cigarette EBIT growth over next 10 years. And that's why they retain their buy and have increased the target price. Praj Industries, that stock is also up and about in trade today, has been on an uptrend since the ethanol policy, and now there is an additional news that they have expanded the bioenergy basket by adding compressed biogas technology. The other stock that is in focus is Eveready because there are reports that promoters, they are looking to sell stake in the company, and that is done to reduce the debt of the company, and also they are asking for an enterprise value in the range of around 3,000 to 4,000 crores versus current enterprise value of around 1,650 crore rupees.
Okay, Sonal, thank you so much for getting us that entire list. But one other stock that is really in focus today is Infosys. Now, after numbers from TCS, the street is watching out from the numbers coming in from Infosys as well as the buyback announcement. Reema Tendulkar joins us to tell us more. Reema, over to you.
Yes, after TCS, it's time for Infosys post-market hour. So we're working with a dollar revenue growth of 1%, constant currency revenue growth of 1.5%. Remember, the December quarter is not only seasonally weak, but it's historically been extremely weak for Infosys. So if you take a look at the December quarter of last year, it was a 0.8% growth. In the year before that, it was a minus 0.3% growth. So compared to what they've done historically in December quarter, this quarter's numbers will fare better on account of the fact that the company has seen some very strong deal wins. Margins will be under pressure. We saw that in the case of TCS as well, on account of the investments the companies have to make, as well as cross-currency headwinds. The key to track will be their FY19 guidance. Currently, it stands at 6 to 8% on a constant currency basis for the top line. Analysts like CIMB, Ambit, Kotak, they all see the lower end of the guidance being raised, which means the guidance could stand at 7 to 8% versus 6 to 8%, though there are Axis Capitals and the CLSAs of the world who believe the guidance will be maintained. EBIT margin guidance is likely to be maintained at 22 to 24%. That's because the company is already guided for higher investments in the second half of the year. The street will also closely track the buyback as well as special dividend announcement that is also scheduled in the board meeting agenda. The expectation is of a $1.6 billion payout. Other factors to track: deal wins, because it's been very strong, record deal wins in the prior quarter at $2 billion, high attrition at close to 22%, and the margins in light of the rupee appreciation and the higher cost of doing business, as TCS alluded to.
That's the Infosys briefing later today at 4:45, and you'll hear from the CEO, the COO, and the interim CFO on the numbers. I mean, I guess the important part from the Infosys numbers, apart from the results, of course, will be outlook as far as the future spending is concerned. And, if TCS is to be believed, that remains, pretty healthy. Outlook remains healthy on spending. It's a wrap here on this edition of MidCap Radar. From Anisha, me, everyone on the team, thank you for staying with us.